Okay, so now let's talk about step number 3, which is determine your summary of audit differences threshold. And this is also sometimes called the posting scope. The summary of audit differences threshold is calculated as 1 to 5% of materiality. As we're going through the audit, we're going to discover various misstatements. If those misstatements are bigger than the SAD threshold, we'll record them on a spreadsheet that lists all the misstatements that we found over the SAD threshold. And then the idea is at the end of the audit, we're going to total up all these misstatements, which are individually immaterial, and make sure they're not in excess of total materiality. So let's go back and look at our example again. Okay, so let's look at a few examples. Let's say I'm testing the AR reserve, which on the balance sheet says it is worth $41,250,000. Now, I can test that a couple of different ways. One is to look at management's estimate and see if I think all their inputs are reasonable. The second is to develop my own independent estimate and then compare the value that I come up with to management's value. So let's say I looked at their estimate and I thought a couple of their inputs were unreasonable, and so I adjusted those. And I wound up thinking that the AR reserve should actually be this value, the value in this row, right? Because this is the value coming from my test as to what I think the reserve should be worth. So in one scenario, I think it could be worth $42 million. That means the difference between what they have on their balance sheet and what I think the number should be is $750K. That seems very big. It seems obviously material. However, maybe the difference could be as little as $10. This seems obviously immaterial, right? Like I shouldn't have to do any more work if it's just $10 off. So SAD is really about determining that threshold point of when do I care about this misstatement? When do I want to do more work over this misstatement versus when I can just tick the misstatement as being immaterial and move on with my life. So $10 is obviously immaterial. $750K is obviously material. We would want to look more into this and see if we can get it fixed. But what do I do for these in-between misstatements? $250K, $20K. Are these material misstatements? Well, that's where the SAD threshold comes into play. And this gives us as auditors guidance when we're looking at misstatements to see if we care or if we can move on with our lives. So let's look at the SAD threshold. So we said on our slides that it's calculated as 1 to 5% of materiality. So again, at the bottom of this spreadsheet that has overall materiality up top, TM in the middle, it has a SAD calculation down here at the bottom. So let's say our materiality is 2,550,000, and this is our using our 3% of pre-tax income. Then we could get a SAD threshold, and this should really say threshold, and this should really say threshold. So we can come up with a SAD threshold at the high end of the range of 5%, which would be 127K. At the low end of the range, 1%, 25K. Right? So let's say I use 5% for SAD. This is typically used in normal settings or when things are relatively low risk. Another thing you'll often see is if I've gone with the low end of the range in terms of selecting materiality, like I went with 3%, and then I went with 50% TM, not 75. So I'm sticking with the low end of the range. Then oftentimes what you'll see is that that auditor will then go with the high end of the range for their SAD to kind of balance themselves out. So let's say we go with the high end of the range SAD threshold, which is 127,500. That means when I come over here to look at my misstatement in the AR reserve, that I am going to be comparing this number to that SAD threshold of 127,500. And What this means is if the misstatement is over the SAD threshold, then I want to do more investigation and I want to do more work. And I also want to record it on my summary of audit differences. So in this case, this would be material, right? If I compare the 250 to it, that's also material. My 20K misstatement, I'm able to just tick as immaterial and move on with my life. Right? Meaning I'm not going to work on it anymore. I'm not going to blow the budget over a $20,000 difference. But let's look here to our $250 and $750 differences to those scenarios. What happens next is I would want to further investigate and understand what is causing those differences. So this might require, looking at the calculation a little bit more. It's probably going to require talking to the client to understand, hey, why did you have this different input from me? Then when you understand that it's a true difference of opinion between you and the client, what you'll do is you'll put this misstatement onto your SAD summary sheet, which is over here. And this is going to contain all the misstatements that we have found during the audit that our client both has recorded up here and has not recorded down here in the unrecorded by client section. So you'll notice we have all these different proposed adjustments related to various accounts that we've audited. And basically when you write a misstatement in the summary of audit differences or SAD, what you're going to do is you write it in the format of a journal entry. So let's say in my example, I think the AR reserve should be $750K higher than the client does. So in this case, I would record that as an additional line item on my summary of audit differences. And I'd say, hey, this is coming from my AR workbook. And basically the adjustment I think they should record is $750K. So on the debit side, bad debt expense, and then on the credit side, I want to record more to allowance for doubtful accounts or AR reserve. So this would mean because bad debt expense is over here, I would do 750. And my AR reserve is contra asset. So I would put that here. And then overall impact on net income would be lowering it by the 750,000. So the point of this spreadsheet is I'm keeping track all along of the errors that I think the client has, right, in this journal entry format. So these are the journal entries that I think they should record to fix their financial statements so they contain no errors. Now, at the end of the day, the reason why you put them all in this spreadsheet is I want to determine if all these individual misstatements are adding up to a material error or not. Because most of these misstatements individually, yes, they're over my SAD threshold, but they're not over my material. They're not over overall materiality, or they're not even over TM for that account. So I need to determine, do I care about these things? And that's when you want to compare in total the adjustments you would make to these various accounts, right? To assets, liability, revenues, expenses. I want to compare those to overall materiality. And this will tell me, for instance, hey, your net income is materially misstated because you have way too many errors in there, right? You have $9 million worth of errors, and they're all coming from different accounts, but the aggregate of these errors is you have $9 million overstatement in your net income. And so that's what I want to compare to my total materiality. If their aggregated misstatements are larger than overall materiality, this is a problem, right? This would mean that multiple accounts are materially misstated, and that would most likely mean an adverse opinion. If it's coming, from one account and we can kind of isolate the error, it might just be a qualified opinion. But in order for us to give them the unqualified opinion, what they would need to do would be to record several of these journal entries so that they can get their aggregated misstatements to be beneath materiality. Once those aggregated misstatements are beneath materiality, then we can sign off on the audit and give them an unqualified opinion. So again, the point of the SAD threshold is really to figure out if we care about an error or not, and if we care about it enough to bring it over here onto this spreadsheet. As you can see, this spreadsheet is really trying to keep track of the major errors we found during the audit. If I only found a difference of $10, it would be a waste of my time and a waste of the client's time to put it on this spreadsheet and harp over it and act like it's a big deal. So that's why we have this SAD threshold to compare our differences to figure out, do I care about this difference enough to pull it onto my SAD summary sheet or summary of audit differences? Okay, and so you'll notice here on this slide, we have this last point that says if total unrecorded misstatements are very close but not over materiality, we could reconsider the materiality and SAD threshold if necessary. So this goes into our discussion of step 4, which is evaluating the audit findings. So this is the point, and I got a little ahead of myself, but this is on the spreadsheet, but this is the point where at the end of the audit, we sit down, we look at all the misstatements the client has on our summary of audit differences, and we say, hey, in the aggregate, are these misstatements material to the financial statements taken as a whole? Okay, so that's what it's talking about here is at the end of the day, we aggregate the misstatements from each account or class of transactions. So this is kind of how we're looking down at the columns, like overall, how is total assets affected? How is total liabilities affected? How is net income affected in the aggregate from all these errors? Then this kind of talks through the process of you'll compare all those misstatements in the aggregate to overall materiality. If they're beneath it, you're generally okay. You do want to consider the effects of misstatements from prior periods, just because sometimes those can kind of roll forward and result in misstatements being material. But we'll actually talk about that much later on in chapter 17. So don't worry about this too much for now. Just know you would want to consider the prior period misstatements as well if they didn't fix them. So generally, when I go through this discussion, I get into another discussion with my students, some of my students, which is basically, all right, so let's say we have materiality of $10 million, our SAD threshold is 10,000, and aggregated errors in our summary of audit differences add up to 9,999,000. So going back to our spreadsheet example, this is basically like saying, okay, when we came down here, we had 2, 5, 4, 9, right? Like literally just $1,000 off. So the question is, do we tell these people, yes, your misstatements are immaterial, go on your merry way, we'll see you next year, here's your unqualified opinion? Or do we say, I'm not so sure about that, it's really close? Well, given that we know auditors are accountants and accountants are very conservative by nature, that should answer your question. But the answer is no, we really wouldn't be okay with that if they're that close. So, and first of all, going to this point, this is extremely rare. So personally, in my 5 years working in auditing, I never observed a situation this close. I also have talked to many of my other past colleagues and people from other Big Four firms that I've worked with now in the realm of academia, and none of these people ever had a situation where materiality was that close to the aggregated errors either. So this would be extremely rare. If it did happen, you would not be on your own as a partner trying to make that decision. You could we talked about the idea that there's a national office. So you can talk to the people at the national office and get their buy-in, like, is this something we're comfortable with as a firm, or is this not something we're comfortable with? The other thing you can do is we talked about how materiality is fluid and can change throughout the audit. So if the client's like, well, aggregated errors are beneath materiality, so we're not fixing any of them, what I can do is say, well, actually, I think you're a little bit more high risk than I initially thought. And so I am going to lower your materiality threshold, right? So maybe my materiality threshold was 5% net income. I'll be like, well, you're more high risk than I thought, so I want to lower your materiality threshold to 3% net income. Now, all of a sudden, those aggregated errors that were just beneath materiality are going to be aggregated errors that are way over materiality. You can also adjust individual thresholds. So maybe I had set my SAD threshold at 5% materiality. If I change my SAD threshold to 1% materiality, there's going to be a lot more errors coming on to the summary of audit differences, right? Because all those ones beneath 5%, I'd initially said they're immaterial. I don't want to worry about these anymore. I'm moving on. And I didn't put them on my SAD summary sheet. But if I decide I am changing my SAD threshold or my posting scope from 5% down to 1%, then suddenly a lot of these other errors that I had waived on and said they're immaterial, they're becoming material. They will come onto my SAD summary sheet. And all of a sudden now aggregated errors will be over materiality again. So if you have clients trying to play around and come up with aggregated errors just beneath your overall materiality threshold, then there are things you can do to kind of adjust your materiality to make them lose out on that game. But I would say overall, this is really rare. And just remember, at the end of the day, the partner needs to be comfortable signing their name to an audit opinion that says this company has no material misstatements in the financial statements. If they're $1 or $1,000 beneath the threshold, the partner generally is not going to be comfortable with doing that, right? Because we're conservative accountants. And so the partner will say, hey, let's just do a few more tests to make sure that we're not finding any other errors. Or can you please just record these couple of misstatements? You don't have to record them all, but if they just record one or two, then they can be comfortably beneath the materiality threshold, and then I can get comfortable giving you an unqualified opinion. So just remember, materiality is not black and white. It seems black and white at first because they're these set quantitative thresholds, but overall, things still require a lot of judgment, and so there are still shades of gray here. Next time, we're going to be covering Chapter 4. So I hope you enjoyed Chapter 3, and I will see you then.